Hello again, everybody. Doing it from DRFX, Forex and Trading. Pound Canadian dollar daily chart looks as if it's forming a consolidation setup based on the nature of these bearish and bullish waves that have been formed so far. What you notice with a lot of the videos that I'm doing is that most of what I'm saying is almost I've repeated exactly most of the videos that I've done about several of these currencies are basically repetitions of each other. This is because most of the currency pairs are moving in such a way that they're moving sideways and are forming consolidation patterns. So from video to video within the last couple of weeks and in the weeks to come, you're basically likely to hear me say the same thing over and over with respect to these patterns that are forming consolidations. The good thing about it is that we can move from one currency to another very easily, knowing what to expect and having a sharpened eye as to what is happening on the currency pairs based on what we know about currency patterns and and how they lead to the formation of consolidations. So this is yet another example of the patterns of movements that lead to the formation of consolidation, and invariably this is what we're going to be getting over the next couple of days. So we have these types of movements that are similar to what we see in the trading manual, and right now we need the market to provide us with another bearish wave at this area here to complete the overall pennant setup. Now so far it's looking as if the market is going to be forming a range setup, given that the support boundaries and that have the support boundary that has been formed already is giving us a horizontal line, and the resistance boundary yet to be formed looks as if it could be also a horizontal boundary, based on the fact that this resistance is basically close to where we are now, or we're very close to this past resistance boundary. So we could get a horizontal resistance boundary if the market rallies a little bit more towards this area. If not, then it would be a pennant with an angle resistance boundary. Now the reason that I'm thinking that the market could actually be forming a range instead of a pennant is the fact that the recent movement has created a high, and if we get the market rallying beyond that high, then it will create an uptrend line and take us a little closer towards this previous resistance. So this is the expected pennant, or rather consolidation setup. The market just needed to provide us with another bearish wave here. This is the support boundary already formed, and the corresponding resistance boundary. For the time being, I'm going to assume that it's going to be a horizontal boundary. Now, what you see here is that the market formed a resistance at 174.55, and we're now starting to see the market U-turn and threaten this high. So what could happen is that the market could break above this high and allow us to adjust our trend line before the market U-turns to start the movement bearish. So we already have an uptrend line formed here across these two support points, this one and this one. And what will happen is that if the market breaks above this resistance, we'll have to now consider this support point as part of the trend line and adjust it accordingly. And once the market reaches this area here and begins to lose momentum and start to U-turn, The break of this trend line would act as a signal to us to indicate the start of the movement bearish. This is something that the market does, and it's one of the peculiar dynamics of the currency market. Whenever we're moving within consolidation and the market is about to start the movement in the opposite direction, sorry about that, just have to wait until that bus passed. Yes, as I was saying, whenever the market is moving from one side of the boundary to another, one of the signals that it gives that it is ready to move to the other side and we should start looking for trading opportunities is when it breaks a trend line. Sometimes if a trend line is not in place or it's not close to where we are now, it will rally and break a resistance high, creating a new resistance high, allowing us to either form a trend line where if one was not formed before, or adjust the trend line so that it is close to where the market would start to U-turn. So this first process of creating a new high and creating or adjusting the trend line is the first signal that the market gives us as sort of a heads up that we should get ready to start trading in the other direction. So right now, the best thing to do is to definitely avoid trading long. If some persons are in long positions, the best thing to do would be to exit them right now, especially if you are a day trader or scalper, because the market has a very high probability of breaking below this trend line here once it's formed and starting a downtrend based on the high probability that the market is forming a consolidation setup. So the main takeaway from this situation on this currency pair, we expect the market to form a consolidation on this currency pair on this time frame based on the nature of the bullish and bearish waves that have been formed so far, which usually indicate the formation of a consolidation setup. We just need the market to create another bearish wave to complete this range setup, and this could come with a U-turn that could start in the next couple of days. This could take the form of a break of this trend line if the market rallies to take out this previous high and allow us to adjust this trend line. The break of this trend line would be the signal to indicate the start of the movement bearish. And this movement bearish is very likely based on the nature of the consolidation, the pattern of the candles. So it's best to avoid trading long. If you are long, it's best to exit your trading positions now and get ready to start trading short as the market begins its movement back towards the support boundary here.